the video here for about 8, 9 days. I was doing some traveling in which I did not have a great reception. I'm back in the US and I've been watching Bitcoin. Everybody's been watching Bitcoin. My former dog walker has been asking me about Bitcoin. The pilot on the and the stewardesses were talking about Bitcoin on the plane. Everywhere you go, everybody's talking about Bitcoin. All right, so you know when everybody's talking about it, that's when the big players are kind of doing something else. It's the same in the markets when the markets are going through a depressive state that the media is all over how negative something is. That's the time the professionals come in and buy. So as you're seeing here, the bigger players look like they're just selling out, right? And the question is what and where and what's the next play? Where's support? Where's this? Where's that? So when looking at trading and where you put your swing levels, where you pull your Fibonacci levels, and uh, everybody likes to use Fibonacci levels. I like to use them, everybody does. But where do you pull them from? Do you pull them from here? Do you pull them from here? Do you take zero up to 20,000 and take half? Okay. So just as a default here, it's where that last swing up came from. See that? That last rally right here. That's where that took off. That's your main level to watch in terms of Fibonacci. Okay? And it's already surpassed the 38%, which was here. And where you have a large run up, you can expect a large swing down. Okay? And from there, we start to fill out a range. What you had here, okay, this was steady up, steady up, steady up, and then once this started taking off, you had a climactic move. It's an obvious, okay? The market went from, where is it? 8,000 to 20,000. It's a climactic move. Everybody was in it. Everybody was buying. And where everybody started buying, the professionals, the bigger players started selling it out because it got a bit extended. So therefore, you're having that swing back to the back down. The one thing you don't want to do is get caught up in the hype. All right, it's very easy to get caught up in hype. All right, like I said, my former dog walker messages me. What do I think about Bitcoin? What do I think? I think you should continue to do something else and not worry about Bitcoin at 20,000. Being honest with you, um, listening to people, no matter where I'm going, I'm hearing it, and that's just signs that the professionals are now attracting. All right, the big lights are attracting the little fleas. They're all like flies, all coming around the light, and they want to see what's going on, and they want a piece of it. I'm reading in articles that people are mortgaging their houses and this and that and throwing money into it. So these are the people right here that was doing that, and right now they are stuck up here. Okay. Does that mean they're going to be in trouble? No. But right now, the market needs to come off. Call it a Christmas holiday, call it a Christmas rally. I know in the stock market, they have what's called the Christmas rally, where typically the last 2 weeks of the year or running into Christmas, you have that run, that Christmas run, and then it starts to fill out. Me personally, this market has come off, let's see, 13.4 out of 20,000. That's like 30%. All right. That's 30% that the market has dipped down. That's not a very big positive. For something to dip down 30%, that's a lot. So you do want to be cautious in terms of being very hypey. What you want to be is more on the technical aspects. So you see this low right here? This was a 12.7. Here's also a 50% line. Okay, 50% line is a very, very big number in the trading arena. 50% half. This came from Gann. Gann made a big deal about the 50% line, Fibonacci levels, halves and squares, and all that other stuff. If you want to get really into the old ancient sacred geometry, but 50% is a big deal. But more important, okay, more important is this this low right there. Okay, that low right there. So should the market push below it, you may get a snapback above it. The other thing you want to look at also is what's called a 618 retracement. This is called fee. Okay, there's two types. Let me type this out here. Uh, Not even sure if I can, how I can type with this. All right, there's 1.618, and then there's 618. Okay, and it's called phi or phi, whatever you want, not pi. All right. Okay, this is phi. Okay, so there's big, and then you have little phi. All right. 618 is used in extensions, which means if there's a high, low, it extends up 1.618. Then you had 618, which is the retracement side, and that's what you have right here. Okay? That's a huge number in the markets. So when I look at retracements, okay, when I look at retracements, 50% determines, is this going to be a shallow retracement, or is it going to be a deeper retracement below 50%? All right. So the difference is, if it's going to be a shallow retracement, then this can extend to new highs. Okay, great. But, and this is also coming down very fast. That's actually not the best type of thing you want to see. All right. This is a very, very large extended move down. The other thing, if it extends past the 50% down to a 618, reactions back up tend not to go to new highs, because this is a deeper retracement. 50% is that line in the sand. Keep a note of that line in the sand. Pushes back up, tend to put in a lower high, and then a higher low, and then a lower high, and then a higher low, where eventually you create what's called this equilibrium, or what is called a trading range, where eventually you'll have another large move up. I'm not saying that the bull run is over. I'm not saying that this is going to go down or going to skyrocket. I'm just telling you, based on my experience over the past 20 years, that typically when you have such a large run up and such a fast move down, it tends to do this and form what's called a trading range, or come to an equilibrium area before it starts to expand either up or down. Okay, and since this is in a bullish market, odds say that eventually this can go higher. But you also have to withstand these swings. We know people have bought the market here. Okay, they bought the market here with the hype, and even here they bought it. Think of how you feel. You're a new investor, new person. They get in because their cousin Ned, right, says, "Hey man, you got to buy some Bitcoin," and they bought Bitcoin right here. It went up. They're bragging to their friends. Everybody gets in, and now the market's here 20%. So they put $10,000, and now they're down 2,000, and now they're mad at their cousin for getting them involved in a bad investment. I told you that Bitcoin's no good, so on and so forth. And what do? They want to sell more. So you have to look at human psychology, human, just the characteristics of how people think. All right, most people that are coming into the markets now are not big in the big players. They're the smaller players. The bigger players were already in the markets. Okay, these are the guys. They're already in the markets. These are the guys that were pushing up. Those are the bigger players. The smaller players that are ones up here that are now what's called trapped. Okay, so you just have to look at human psychology and on the and how people react to money. Think about it. All right, so I want you just to stay on the side of caution and not get caught in the hype. Now, if you want to look at areas of interest, okay, right here is important and right here is important. So let's look at those levels. All right. So mark the levels down: 12,600 and 10,000, 11,000. Okay, real important areas. As you can see, this spike here, this spike here. Okay, let's just identify them. Right there and right there. Very important. But when you're doing Fibonacci, you pull from here. Now, what I tend to do also in a normally traded market is I pull from there. I also pull from the prior lows. All right, I do that. But it's not needed in this case. What's needed is to watch, again, the large move up and the large move down. A lot of people are trapped up here thinking this is the buy, this is the buy, this is the buy. And I see people on the internet, all right, posting that, time to buy again. Again, just be cautious. These moves here were retracements in a trend. This is hype, and this is trapping people. Yes, it can go up. All right. So even if it stayed here and did this, okay, it would not be uh, that that out of unexpected. All right. But I do expect a range to fill out. We got the holidays, and just let's all consider the fact and what I've been thinking, been talking to the leaders, been talking to Jason and Alex and all these other leaders, is the fact that if you're in the markets right now and in the cryptocurrencies, you're gonna have to learn to trade them, not look at them as one big giant investment and hold like this. Okay? I saw this market back in 1999, 2000 with the stock market, made fortunes. Okay, and people have made fortunes with this, but the real fortunes are going to come from this. Let me show you. All right. So you have a big move up. Great. It went up from 5,000 to 15,000. Okay. All right. Great. Here, 15,000. 15,000 points. It went up. All right. That, if you bought it here. But the big plays come from going from 20,000 down to 12,000, up to 19,000, down to 13,000, up to 18, down to 14. And before you know it, all right, over this swinging period, it actually adds up to more than this whole move put together. This is where traders take advantage and create wealth. Most of the time, the markets stay in ranges, as we know from Forex and from stocks and other markets. Markets stay in ranges. There's more money in a range than there are in one big giant swing because you don't know how far a market can go, right? So when you're looking at the markets in terms of creating profitability as a trader, ranges tend to give you the most profitability. And there's that 5% of the time where they expand if you're already in the market. And many times, a lot of people are not. They expand without you, and you're waiting for the next trend. Most of the money is made in range filled markets. I'd rather make money in a range filled markets because you have this type of action always. All right. Very, very good markets to play. What I'm saying is look mentally to start shifting gears in the going forward in the Bitcoin market and look at this more of a trading game, which leads me to the next thing. iMarkets Live, myself, Jason, our traders, our educators, we're going to be coming out with several cryptocurrency traders. We're looking at some really phenomenal things. We have the harmonic scanner for doing for crypto already. I already put that on Instagram. We have our web analyzer, does crypto. I'm doing some other stuff with the developer on that. We're going to have swipe trades later on, probably after the first quarter of the year, releasing right into our Vegas event, so which is swipe trades for the coin. So we have a lot of crypto stuff coming, but don't just focus on crypto. Don't just focus on the buy side. Focus on the trading side, capturing swings, swing highs, swing lows. Also, don't abandon Forex. Forex has been around forever. It will be around forever. Crypto's a new market. It's not the only thing, but yet there's a lot of attention on it. And us being professionals, iMarkets Live, you as traders, you always want to have the best of the best. So my job was not to sit and tell you every day it's going to go up, going to go up, going to go up. Now that the market's making some serious noise, now we got to really pay attention to it, of where the next swings are that we're watching. As I said, here, line in the sand at the 50%, and that's from the bottom of the swing before the market exploded here. 50% line in the sand. Past that, you're looking down at a 618. Big, big, big numbers to watch, levels to watch. I'll catch up to you on Sunday night, and I'll give you my analysis going forward. Rock and roll, guys, girls. Have yourself an amazing, amazing holiday weekend. Christopher Terry, over.